It is now officially 4:05 p.m. on Wednesday, February 26. We will call the meeting to order. And just want to start off by saying it's good to see everybody for the first time in 2025. I was asking everybody how their year was going so far, and I think it's kind of going by pretty fast for everybody, and everybody's pretty busy and gearing up for spring break and summer. So, hopefully everybody's doing okay. We got an important agenda today, but first thing I want to do is start off with opening the meeting up for public comment. Do we have anybody who has any comments they'd like to make?
We signed up.
Registered.
Okay, hearing none, we'll go ahead and close the public comment session on the agenda. Second item on the agenda is the approval of the meeting minutes. Has everybody had an opportunity to review the minutes? They're after the first tab in your packets.
Approval minutes.
Okay.
Second.
All right, no questions. It's been properly motioned and seconded. All that approve, can you respond by saying aye?
Aye.
All those who oppose? Minutes officially have been approved. We'll mark that in the record.
Hey, Steve.
All right, good to see you, sir.
Okay. All right. We're on the third item on the agenda. Just approve the meeting minutes, and we will start by asking Mr. Tim Burdick to give us a review of our investments and an update on the market.
Give it a second and jump in there.
With a second.
There it goes.
All right.
All you had to do is move.
Afternoon, everyone. Per my normal procedure at these meetings, I've broken the presentation down to three parts. A very brief review of the markets and what's been transpiring lately. Our information is I tried to make it as recent as possible, so it's through the end of January. We can review performance. We started working on this portfolio in April last year, so I've got April through January. And then, as I've done historically, I'm highlighting one manager just for a couple of minutes so that you can get to know who you're working with. This one's kind of boring. This is fixed income, Baird Advisors, so I'll do it quickly. Looking at the first document, the market environment for 2025. Frankly, I start talking and people immediately ask, well, how's it been since the election? And it's, as you can see on the right-hand side, 2024 ended up being a fairly good year. U.S. stock market, various indexes are at the top, led by the S&P, which was up 25%. 2 years in a row, it's been up over 20%. In the middle are the non-U.S. Not as good. That EAFE index, the third one down, that's probably the most comparable to the S&P 500, up only 3.8%. And then down on the bottom, Bloomberg Ag, that's bonds, investment-grade bonds, that was up only 1.3. So the headline was fantastic, S&P up 25%, but below the surface, there was most of the markets around the world performed significantly less than that, but all positive. January was a positive, as you can see across the board as well. Really, since the election, frankly, December was negative, January has been positive, February here has been negative. Because of the last 4 or 5 days. So there's some level of volatility, but it's, basically 3%. Your portfolio is down a couple of percent December, up almost 2% in January, down probably 1.5% here in February. So it's not nearly as volatile as the headlines and sort of everything that's out there, but the market is reacting to what's transpiring. And that's actually the second slide is we have to focus as investors, we have to understand what's happening. We have to try and appreciate what the ramifications are of those actions, and then see how that can impact the economy and therefore the markets. And we're really focused on three things, and those are the columns on the right-hand side. Number one, what's coming through, what's happening through Washington, how does it impact growth? Think GDP. because that impacts interest rates, that impacts revenue, that impacts earnings, so it impacts the stock market, the bond market, et cetera. So we're again, some of this is reading the tea leaves, but you need to understand and try and appreciate what's coming through and how that's going to impact growth. On the second, impact of inflation. Again, the other side of it, very much involved in what happens to interest rates. So how are each of these actions positive or negative from an inflationary perspective? Because again, the Fed is at 4.25 on interest rates, wants to bring them down. Just as of today, again, we have what would be termed an inverted yield curve, where the longer-term rates have just ticked under the shorter-term rates. We were good for a while, and now we've ticked under again. That has to do with both GDP and inflation expectations going forward. And then longer-term, the deficit. The deficit's in the headlines every day now, so the market is becoming more aware and, frankly, a little bit more sensitive to it. You know, the deficit's been around for a long time, but the market's sensitivity to the deficit and the idea of growing deficit has increased. Speaking of the yield curve, the green line was last year, blue line was this year, but again, now this has shifted. The long-term interest rates are going down. That's good. As a bond investor, interest rates go down, bond prices go up, so bonds are appreciating. So it's positive from that aspect. But when you have an inverted yield curve, it has historically been a good, not great predictor of a recession. And that's sort of what the market is starting to price in. The consumer confidence levels are the lowest they've been in about 3.5 years with the reading that just came out. So consumers, which are 2/3 of the economy, they've got some questions. That's starting to be reflected into the markets. I'm always told I'm too negative in these presentations, so I'm trying to bring some positive charts. One of the good things that's happened so far this year is it's not just tech. NVIDIA came out with their earnings just about an hour ago. Their revenue's up something like 78% again. It's, you know, they can't help themselves but make money, and those magnificent seven, those tech stocks are leading the charge. But of the 11 sectors in the market, 10 of them were actually positive in January. This is not a chart that I've been able to put up in a while, and it's only 1 month. But it is what we want. If the market's going to continue to move forward, what we would like to see is what's called breadth, where it's not just the technology stocks, it's not just Apple and Microsoft and NVIDIA that are bringing everybody else up, but we'd like to see a lot of stocks doing well on the U.S. side and the non-U.S. side. So same chart, but for non-U.S. stocks in January. So this is something that's materially different than what we've seen the last couple of years. We hope, seriously hope, that this continues, because that's probably the best indicator that the stock markets can continue to move forward. This is a little messy, but stocks can go up for one of 3 reasons. It says at the bottom you can have earnings growth. Like NVIDIA today, companies make more money. Dividend reinvestment, dividend growth over time. Or the stocks can simply become more expensive. Valuation multiple is the term there. But if you look at it, price over earnings, if a 20 PE stock becomes a 40 PE stock, that just means it's twice as expensive. And over the last 2 years, you can see almost all of the growth of 2 bars on the right-hand side. It's been almost all valuation expansion. That means that the stocks are simply, it's not because of growth, it's because stocks are simply becoming more expensive. The market has momentum behind them, and it's moving them up.
Well, maybe you just answered my question, Tim, but I was just wondering what's driving those upward.
Yeah, it is. The term, that the official term is momentum. Mm-hmm. But essentially, it's the stocks that go up yesterday, go up today, and go up tomorrow. In the first 6 weeks of the year, just in stock ETFs, exchange-traded funds, $125 billion came into the U.S. market. So that cash flow, people still investing into the market, that's the momentum that allows the stocks to continue to go up. It makes the balloon bigger and bigger and bigger until it pops. That's the negative side of me. We always have a correction. We always have a bear market. Timing, it's impossible. But the market it's getting ready for one. We'll talk about it a little bit when we go into your portfolio, too. One of the other challenges is that the big stocks are becoming enormous. Apple, the U.S. is the largest stock market in the world by capitalization. Japan is second. Apple's as big as Japan. NVIDIA is as big as Japan. Microsoft's almost as big as Japan. They used to be as big. We have individual companies as large as any other stock market in the world. You take the next 5 largest stock markets, we're bigger. We just take our 5 largest companies. So we have a concentration risk that we also need to be aware of. In your portfolio, you're invested in these through your large cap U.S. allocation. You're going to see you're very tight to your target. We're not going to let those run, because there's an extra level of risk associated with investing in the U.S. right now, because you're investing a lot. You're investing 6% of that money in Apple, 5% in NVIDIA, and so on. So in your top 10 stocks, it's an index of 500. It's supposed to be diversified. About 38% is in 10 stocks. So it's truly, it's something that we've got to pay attention to. On the real estate side, you have currently a 5% investment to institutional real estate. Again, industrial buildings, apartments, office, and retail, so not individual homes or something of that nature. We like real estate because it has some income associated with it, some inflation protection, and it has a tendency to perform well over long periods of time, with about 2-year increments where it has to adjust. And we're just coming out of one of those 2-year adjustments. Real estate had to adjust to both higher interest rates, the cost of debt underlying that real estate, well, that went up by 4 or 5%, so the building is worth less. And then office. Office across the country is worth about 45% less than it was. So that has to be accounted for in all these valuations. It appears that has worked its way through the system. Ballard, the manager utilizing, has basically been flat, just very slightly positive the last 2 quarters. And that's a good sign, because this shows when they come out of this, real estate has a tendency to have a long period of positive returns, and that would be beneficial to the portfolio. The other side that's we're seeing some positive momentum is on, just last slide on this, is private equity and private debt. This is the equity, but the chart for debt is almost the same. There is more transaction volume going, starting here in the fourth quarter, and we're starting to see it this year as well. We want transaction volume. We want more of that dry powder to get to work, and we want more exits so we can get better valuations. Private equity for the last couple of years has been somewhat stagnant because there's been very little movement. There's just haven't been enough transactions. How do you know what something is worth until you actually have a transaction to determine that and let the market determine it? We're starting to see more transactions, so that's a positive on you've got about 10% of this portfolio right now, 7.5, 10's the target, 7.5 actual, in private equity and private debt, specifically for that, and that would help. So your portfolio, as of the end of January, stood at about $68.5 billion. Percent of portfolio is actual. Policy percentage is what's in your investment policy. The only difference of any materiality at all is down near the bottom. Golub Capital, your private debt manager, when we signed up with them, they called half the capital initially. They haven't called the other half yet. So that's where it's 2.4 versus a 5% target. So we've taken that extra couple of percent, we put it up with Baird in investment grade bonds. So you're in public debt instead of private debt. We're using that as the proxy. Baird's also next day liquid. It's a mutual fund. So when Golub does call the additional money, it's easy for us to raise. Otherwise, you are, and again, we're trying to keep this over time very close to targets. Summary of cash flows. I like a line that goes nothing but straight up, so it's a good start here. Since inception, again, this is it's officially since April of last year, In total, this is in the lower right-hand corner, 63.1 million came in. The portfolio has earned realized and unrealized gains 5.4 million. So that's been the gains over the past 9 months or so to get to your $68.5 million number now. So that 5.4 equates to this 8.8% return. Again, it's not, we don't even need to annualize it yet because we haven't been with you for quite a year yet. But on a total portfolio level, and again, as you remember, we sort of dollar cost averaged into this portfolio over a period of 6 months last year, really in part to protect in case there was a downturn. The downturn didn't happen, but getting the money to work obviously was advantageous, the $5.5 million and the almost 9% return in less than a year. The report includes individual managers. If you have any questions, please let me know. But overall, it's only been 9 months. I better not be mad at a manager yet. And we're not yet. So not everyone's going to outperform every time period, but we're comfortable with what they're doing. We include a liquidity schedule. Your portfolio is in a moderately unique position because your market value is only going to grow over time, and your cash flows are more than covered by the $3 million you're going to pay out at the end of March is more than covered by the $10.5 million you have coming in July 1st. So this having 47 million or 68.7% of your portfolio next day liquid, it's probably too liquid. Now, we did this initially, again, to be conservative with the initial roll-up, but for your next meeting, what I think I'll do probably every second meeting of the year is an asset allocation study. So I'll bring that to the next meeting. I'll do that in advance of the July 1st, the 10 million coming in, so that we can have that conversation. We can look at how we want to put that money to work. Let's have that conversation before the money actually comes in. So we'll do the asset allocation study at the next meeting. My asset allocation team is kind of pounding on my door saying, this fund does not need to be this liquid. There's an illiquidity premium built into the markets. That's great when things are good. So I want to be cautious and I don't want to move too quickly, but in the asset allocation evaluation, we'll look at whether we can get a little bit more money to work in assets that can earn you a little bit more over time. Again, nothing dramatic. What you have here is going to be 95% of what you probably have next year. But if we can get you something additional from a return perspective without taking on more risk, I think that's something we need to look at and try to accomplish. And then last page of all reports, surprisingly, managers don't work for free. So a list of all your investment managers and their estimated annualized fees. Lastly, I just want to take 1 minute, and because that's about all anybody wants to talk about bonds. You have an investment, your investment grade bonds, so your high quality bonds are invested with a firm called Baird Advisors out of Milwaukee. Apparently it's a great place to work. They always include this in their front of their book. Founded about a little more than 100 years ago. I only hit on a couple main points. This team, we've been working with them. I've been working with them for 25 years. We have no, again, official affiliation with any of the managers. So we hired Baird because we think they're the right manager to utilize on this portfolio. 159.1 billion is probably the number to take away from this page. That makes them a mid-sized bond manager. We actually prefer that. Working with some of the largest firms in the country, they have so much in assets that individual bond selection doesn't matter anymore. They have to make big macro decisions because they can't make the small ones. So we don't tend to work with the largest firms in the country because of that risk. We tend to work with, and believe it or not, 159 billion in assets and just in investment grade bonds is considered a mid-size in the industry. And we do like that. You can look at their pretty faces. They really only have 5 products. You are in the product in the middle, the Baird Intermediate Bond Fund. We did that on purpose so that we didn't want to take on as much interest rate risk as the market in general. That's usually looked at as the Baird Aggregate Bond Fund. The aggregate bond index is sort of the default in our industry. We've taken on a little bit less interest rate risk there. What you want to see from a performance perspective, the number that matters to me are those blue numbers on the right-hand side, the plus 64, plus 47, that plus 39, et cetera. That is their net of fee value add on an annualized basis. It's not exciting, it's not a lot, but it's almost exactly what we're looking for. We want 30 to 50 basis points out of your bond manager, net of fees on an annualized basis. And they've been able to accomplish that across the board over time. That's why we like utilizing them. They are, just from again, I lose it. Start talking bonds, it gets boring really fast. As soon as I start talking about duration is interest rate risk. How much interest rate risk do you want to take with your bonds? You're an intermediate, so this is 3.7 years. Basically what that means is if interest rates go up by 1%, you lose 3.7%. If interest rates go down by 1%, you make 3.7%. So that's an easy way to understand how much risk you're taking with those bonds. Again, the world tends to invest more in the aggregate, which is 6 years. We're here at 3.7. We feel more comfortable. There is almost no difference in yield. So why should I take on 50% more interest rate risk going from 4 to 6 to get whatever, 20, 30 basis points in additional yield? It's the risk return for us right now just simply isn't worth it. So that's why, from a risk perspective, and why you're an intermediate. The other thing this Baird does, that's 2 final thoughts. One is what they are called is duration neutral. They match the index exactly. They are not trying to time interest rates. I do not want my bond managers in general trying to decide what the Fed, trying to prognosticate what the Fed is doing and where interest rates are going to go. Interest rates have actually become more volatile over the past couple of years. Hedge funds, they're trying to time interest rates. They're in the bond market in sort of a large way, and they are making the bond market more volatile than it has been historically. I don't want my manager trying to figure out what hedge funds are doing. So they've decided, Baird is, and it's the way they've always done it, we're not going to time interest rates. We're going to be neutral there. We're going to try add value through individual bond selection and being in the right sectors. That's what we like. Last thing for them, and then I'll stop. They also, all their mutual funds on the institutional side are 30 basis points. In this world, for mutual funds, that's inexpensive. And so we can stay with the daily valuation. So it's very liquid. You don't have to go through the custody challenge of having separately managed and having your own bond portfolio. And you can do it at a reasonable cost. I don't want to sound like a salesman for Baird, and I think I just did. But that's why we've utilized this organization for your investment-grade bond allocation. Over time, as you grow, we'll need to bring somebody else in to complement them, but for the time being, we're comfortable utilizing them. Any questions over any of this that I've gone over?
I got a couple just questions I want to ask on 2 different things. One would be just not on Baird, but on the Schenkman, and this may not be something that you have available to you right now, so just maybe something you can provide to us.
Yes.
Kind of curious as to, it looks like we've got 10% of the portfolio in that Schenkman fund, and just interested to know how much of that is in low credit, kind of
About half of
high
it.
yield.
The 4 points means the 4 areas they
You're
invest
kind
in.
of assuming.
Yep. It's a multi-asset fund. It's high yield, bank loans, convertibles, and then they have what they call a private or less liquid sleeve, which is why they're in a monthly commingled fund and not daily. So they have, in general, about half of this portfolio, the bank loans and the high yield, are obviously all generally below investment grade.
Yeah.
That will, in the new asset allocation, I will probably look to knock that down a notch. Spreads are tight,
Yeah.
not a lot of money to be made. The yield is great, yielding 8%, but probably more risk than return there. So we may look to take a couple of percent off of that.
I'd be in favor of that, just in terms of some of these other things that we're talking about, just when you, considering it is a large sleeve of our fixed income, having a little bit higher towards that, the Baird fund, something like that, that's going to be a lot more, 2/3 or whatever in treasuries, agencies. It's one of those things where a lot of times that kind of stuff right there is getting sucked into just a risk-off scenario. If there's ever a risk-off scenario, you'll see that with 10% of our portfolio that's kind of in the bonds that's supposed to be our safe stuff, right?
Yep.
And so those types of funds, a lot of times, if they do have that much exposure. So just an idea to think about there. And
I appreciate that.
On the idea of the Mag 7, the diversification limit there with having so much concentration in 10 stocks. Are you guys discussing or thinking about doing anything in terms of, whether it's not the weighted average S&P, the equally weighted S&P?
The equal weighted.
Something. I just don't know, excuse me, I don't know that we get that in the defensive equity, kind of the diversification away from that, because it's based around the S&P 500, isn't it?
Correct, it is. So you get some diversification with the defensive equity, about half. But yeah, we have started to look, we have not implemented it yet. We have started to look at the equal weighted. The equal weighted index is all 500 companies in the S&P have the exact allocation, about 0.2 of 1%, so that the size of the company doesn't matter at all. And what you do by that is you get a better level of diversification. Now, it significantly has underperformed the last 2 years because Mag 7's kind of run the show, but it does bring in a level of real diversification to the portfolio. Right now, you're getting some of that because you actually have an investment to mid-cap and small cap. So you've got 28% in large and 12% in mid and small. So we are trying to not just have it all there.
Well, it's hard to get too far away from the S&P 500, okay? So I'm not trying to really say we need to be pulling a bunch out of that S&P 500, but maybe what you're also getting at when you're talking about getting rid of some of our liquidity is the ability to add some private stuff, and that gets us away, gets us some diversification also, right?
Correct. If the two places, we didn't plan this ahead of time. Two places I would look to take money from if we were going to continue to allocate and reduce liquidity, add return, is Shankman and Fidelity S&P. Because those are the two where I feel like the risk return, Marquette does, the risk return ratio is the most off right now.
Yeah.
So again, not a big sweep. I don't want to try and time this thing, but a couple percent here and there, those things that can add value.
Really? Yeah. All right. Perfect. Good deal. That was all I had.
Okay.
Yeah, it's kind of a pickle with the S&P, right? From the standpoint of the reason that the Mag 7 make up 30-some-odd% of it is because they've done great.
Yeah, they're
right?
fantastic companies.
So when you go to the equal weight fund, what you're doing there is you're going to reallocate and cut some of your winners and buy more of your losers.
Yep.
So
You're almost betting
get it.
against them. You're almost betting against Apple and Microsoft and NVIDIA, which just, again, they can't help but make money. So there's something intuitively against that doesn't make sense when you do that.
But how do you reallocate when you got all your eggs in this big S&P fund basket? How do you reallocate that 36% without missing out on the other 74%?
Well,
it's just an interesting predicament.
Percent sleeve here and there of it. You're really not trying to make any big bets.
Yeah.
No, but what you
Out by any stretch.
What you do is you don't let retail investors are great at just letting your investment run and not rebalancing. And in times like this, that adds risk to the portfolio because what goes up will come down. And when it comes down, it tends to come down violently. What you want to do and what we're responsible for doing is continuously looking at the market values, rebalancing, basically taking the gains off the table. So we do that automatically, which is good. And then on top of that, again, this asset allocation, at maybe taking a little bit more of that off the table, even, maybe 2.5%, 3%, something like that additional. I think those are the types of steps that you take. You want to be in the market long-term to make the money. Take the ups with the downs. It's just it's the unfortunate volatility associated with investing, and you don't want to try and time it.
Yeah.
Because you'll get it wrong. But when something is very expensive, and not only the S&P but Schenkman's like that, that is when you trim things down a little bit. So that's what we'll be looking to do.
So Tim, when there is a big swing in rates on bonds or something like that, for example, how do we react to that typically? I know you say you don't try to time it, but
In the short term, you don't. In the long term, you look for opportunities. So, and again, I'll use Schenkman as the example. Right now, spreads are very tight. You're not getting paid much for that premium for being in lower quality bonds. When that premium is tight, you don't invest as much in it. When that spread widens, then you put more into it. So this isn't a day or a week or even every quarter or something, but there's generally over time, the market will give you an opportunity to take some money out, which I think it is right now, but it'll also somewhere down the line give you an opportunity to put some money in. So we look for those types of opportunities, and at that point, we'll make an additional allocation. We'll overweight and underweight accordingly. I think long-term, the big picture here is to, again, you don't need to be 65, 68% liquid. You're in a very unique position here with the money coming in each year and more than covering the need, the outflows. So we can look at we don't need to be as dependent on the liquid markets, both on the bond side and the stock side, and we can look at other asset classes. We talked about JP Morgan and Partners Group and some of those other assets that truly can not only make you money, which they need to do, but also really be diversifiers and reduce your exposure to the markets. So it is something that over time, and we've talked about this before, but over time I think we're going to take you, we're not going to make you illiquid, we're not going to do anything dumb, but we can incrementally get you, I think, to a position where you can take advantage of the financial position that you're in, and over long periods of time, I think, make additional money as a result of it, and not have to be dependent on the stock market going up 25% in order to do it. That's really the goal here.
yeah, I agree. Risk tolerance is a tricky thing. And, trying to navigate through all that can be a challenge, even personally.
It is, and your tone with me has been moderately conservative, starting up, which made absolute sense last year. You don't want to start an investment program and immediately have it go down 20%. That's just foolish. So we came in conservatively from an asset allocation perspective and from the implementation, and it worked. Again, you made over $5 million in 9 months or something. So that's worked. That's done very well. So we just want to build off of that.
Excellent. What other questions do we have for Mr. Burdick? Hearing none. Well, we certainly appreciate you being here and appreciate that good report and all the good investment activity and decisions you all are making for us. Thank you.
Thank you.
All right. Next item on the agenda, number 4, is grant recommendations. We have Mr. Carl Montgomery here is going to talk to us a little bit about all the decision-making and all the things that have went into making these contributions this year. Thank you for being with us today, sir.
Thank you, Mr. Chairman.
Turn it over to you.
Okay, Craig, I think, is going to put the list up. We had 29 nonprofits that we funded, and we were, the amount of the 29 that we funded, the request that they had was a little over $1 million, and we had $490,000, which kudos to committee and the investment group for increasing it from the year before. We appreciate that. So we were able to fund about 53% on average of each of the 29's requested amount. This is our list. There were, I think, about 50, I believe it was 51 total that had applied, and then there were, I think, 5 that didn't qualify right off the beginning, just for various reasons. Maybe weren't located in Murfreesboro or whatever the situation was. So, but it came down to the 29 here that we funded. I'll be happy to answer whatever questions you have. It is a interesting process to go through everybody's information and try to figure out. We have a scoring system where we grade them, and so we have 7 members. Everybody's comes up with their own grade and their own recommended funding amount, and then we bring that information back to Karen through the portal, and we come up with these numbers based on an average at this point. We do have some. We've had some discussion because obviously it's going to get bigger and bigger and bigger, and we're going to have to come up with different ways to come up with a number. That's the biggest thing that I struggle with is the amount to give. I can grade them and I can come up with an 80 or a 90 or whatever, but then when you get down to it, we know we only have 490,000, and we've got to try to figure out how we're going to allocate each one of those. If you scored, a 90 and you were asking for 65, and you scored a 80 and you were asking for 65, that's the biggest struggle I have. I wish there was some kind of magic formula that would spit us back a number just so we may be more consistent, because I may be one committee member that's, I may give somebody that's asking 65, I think that they may get 60. Well, another committee member may score the same score and give them 40. And so I think over time, as this fund gets bigger and the amounts get bigger, I don't know the right answer to that one. That's one that we are in discussion with.
Yeah, I think, and certainly, Board, jump in if you have any questions about this. And Carl, I may be asking you you may have already answered several of my questions by saying you all are still working through figuring some of this out. But I'll just kind of ask them anyway, just kind of based on what I was thinking as I reviewed all the information a little bit yesterday. And it's been a while. I know you all have a system in place, and I believe applications are processed through that system. I'm not exactly sure what type of questions are being answered or what all constitutes the selection criteria when you talk about the scoring.
Okay. Yeah, just in general, some of the questions would be, how long have you been in a nonprofit? And so that's a pretty good, that's one that scores, I think, 1 to 10, I believe. It may be a 1 to 5, but there's some of the criteria are 1 to 5, some of them are 1 to 10. Their financials, when they report their financials, if they're healthy and they're using their money wisely. Some of them are based on the project. Some projects that we see may not be anything that we're interested in funding. Whether that gets a grade if we don't think it's something that fits what we're trying to do. I will say this, and I've made it pretty clear to a lot of people. We have a lot of homeless nonprofits, it seems like, and it would be awesome if they could consolidate. If we could, I seem like we could give more money to one that they all do the same thing, helping the homeless, but they get spread out. And I counted about 6 just a minute ago on my sheet. That's just something that I noticed over the 2 years that I've been part of it. That's just my opinion.
Yeah, thing, I know there's a certain level of subjectivity built into the process based on your observations, background of the company. I'm assuming you all consider the impact that it's having locally on the economy and in the community and things like that. I really don't know that there's guidelines that have concretely been established for all that, but I believe those things are at top of mind. Is there anything else that's specifically objective that?
No, I mean, I think we have a fantastic group, and, Craig and, or Karen, either one can, I think when we score them, we all get fairly close. I think it's kind of amazing how out of 7, we all get fairly close on our scores with each nonprofits. It's just a matter of the amount of money for me, just to try to figure out how to do that. When they're asking for $1 million and we've got 500, and you got some guy, one company wanting 65,000 and one wanting 12, and it's just, that's the biggest thing I struggle with. And I don't know that there is a right answer to that other than we just have to just pick it and go with it. I don't know any right answer on that.
There's not one. There's not one. And speaking on both sides of that, for years working with a not-for-profit, I never submitted a grant that I fully thought I'd get 100% up from one funding source. Never did. And I probably did twice in 20 years of philanthropic work. Speaking as a board member of the Community Foundation of Rutherford County, these are the same people, often with the same grant, applying there, and our fund is much smaller. We'll give out $60,000, $65,000 this year, but we're helping supplement some of the same things that you're not able to fully fund, and so are some family foundations in Rutherford County. So I'm not saying don't worry about that. That's their job, is to go out and, frankly, find enough funding sources to be able to make it work and to get it done. And certainly this is huge. I mean, this is like manna from heaven. This is a huge windfall to boost what this community can do. But even when those numbers get large, you're just going to attract a lot more applicants too. The number of homeless support, which are good things, will come literally out of the woodwork, and you'll never be able to meet all the needs. But I think you're doing a good job, and I think the scoring system's the right way, and I think there is a lot of subjectivity to it. And to me, the merit of what they're trying to accomplish and how that will benefit the community based upon the standards of what the grant committee is trying to get done is the biggest single thing.
Thank you. And that brings up something that we've had discussions with. It's one of the grading points is, do they have funding from other places? We don't want, or I don't want, I won't speak for the rest of the 7, the other 6. We don't want them completely relying on our fund. They do need to work and get funding from other places. So that's yes, sir.
Do you have a number on how many of these are new compared to like last year's applicants? And do you have is there a percentage in your guidelines that you shoot for that you want to have like a certain percentage every year of new applicants, or do you find that it's a repeat of the same from last year to this year?
We don't have any kind of goal for new ones. We do, I think we had new ones, about 4 or 5. Is that right? I think it was about 4 or 5 new ones. And we had some that didn't even reapply, that got money last year that didn't apply this year. Well, which we thought was a little strange, but it's fine. I mean, they may not have needed it.
Do you get any feedback from some of these entities? Like
we do.
For instance, like the job readiness. Do you ever get something maybe after the year to say, hey, this money helped this many people? Do you get some of that?
We get a mid-year report on the ones that we fund. It explains how they've spent the money. But also, Karen sends out a email to all the, is it all of them? Everybody that applies that you send a message to get feedback on how they thought the system was?
Yes, we did an initial survey to find out how the process went for them. But for the ones that get funded, there is a mid-year report and a final report. And then we also offer any of the applicants that were denied an opportunity to meet with them and review their application and provide any feedback to help assist them to improve their application process.
And unfortunately, this year we had one that was approved to get money, but they did not apply for, they did not provide the mid-year report, and that was part of the deal, and so we did not fund them. That was just something that we voted on, that if they're not going to do that, and it was just a missed error, but it was, everybody else did it.
So would something like that push them into the, out of the qualified category?
Yes.
Okay.
For permanently or just this year?
No, they can reapply next year.
So
Yeah.
if they have staff changes and turnover and things, there's nothing really taken into account for that, it's just cut and dry? And that's not bad. I'm just-
Yeah, no, it's cut and dry. If they don't provide it, we voted that they do not get the money.
Is there any grace period built? I noticed that in the notes. Is there a grace period
No,
built in there?
not that I know of.
Okay.
Is there a grace period for the
For them completing the,
mid-year?
no, they're provided the information on the deadlines when they receive their funding, and then the system automatically generates email reminders, and then we monitor it as well, and so we send out some additional email reminders outside of the system, so we try to provide enough notice to make sure that everybody is able to comply.
Yes, sir.
No, I'm curious, when you do mid-year or really even better year-end report, and you get an accounting of what they've done with the funds, and let's say you typically give, we'll say you give 50% of what the request was, do you ask how much total they received, not just from this foundation, but how much they received during the year? In other words, they get 80% of what their project budget was, or 100%? And do you ask if they got any other foundation funding for the same request? That might help you as you look, charting a course down the future.
I think that's a great idea, and I don't remember seeing that in the mid-year report.
No, I don't think we asked that question.
No, but that would be good. Very good.
I'm not suggesting this, but this...
That comes from experience, I can tell.
No, this is having, you can get if you've got one project, you could ask 30 foundations. You could get overfunded. Now, again, you're going to depend upon the integrity of the institution to tell you, well, first of all, not to do that. Once you get funded, quit asking. Or even rescind an ask that's already out there. That's the honorable thing to do. But it would be good just to know where they're receiving. And not from individuals. They're not going to reveal individual donors, but they ought to be willing to reveal foundations that have contributed toward that project.
Good point.
I'd just like to say, I think you've done a beautiful job, and when you talk about how much to give each one, that's why you have several people on the committee. So in year 2, you're still getting your sea legs under you, and the more you do it. But I think it's the combination of all these voices that come together that each time you do this, you get a little bit better at it. And as you process the reports, you get a feel for each nonprofit and how they do business. I know so many times the grant writers are also sometimes the ones who work on the data. And so as your reporting comes in, that's important. And just so you'll know, Karen, and you, Carl, the Christy Houston Foundation, we have just funded 17 interns from the MTSU Data Science Institute. We're going to do a pilot program this semester with 5, and the overwhelming request of 17 nonprofits that want to participate, our board went back to the drawing board and funded the remaining ones for this semester. So Dr. Keith Gamble at the MTSU Data Science Institute is really pouring he had 32 students want to do this. So they're really pouring themselves into our nonprofit community. It's going to help everyone. Because so many times these grant writers, they're either also in charge of the data or they use the data to tell their story. So hopefully that's
great.
going to help.
Yeah, well, good.
I think you've done a beautiful job.
Thank you. Thank you.
I agree with that. Y'all have done a really good job. And
Thank
the
you.
committee's done a great job.
It's a great committee.
An exact science, and you do get better at it as you go
Yeah.
on.
Yes, sir.
I'll open with a statement and get to a question, Mr. Montgomery. A good friend of mine is a politician, and he told me, we were talking about budgeting one day, he said, well, Richard, the hardest thing I have to do is I never have to choose between a bad project and a bad cause, funding that, and a good project and a good cause, funding that. I always have to choose, do I fund a great cause or do I fund a great cause? And that's the hardest part. So I will speak out of turn when I say this on behalf of this board. Please thank that committee for what they're doing, because
I will.
it's very subjective what you're having to do, and you're having to choose between all of these great organizations and which ones to help fund and those things. This board, we have very sharp people, Mr. Burdick and his team that do the heavy lifting for us. So it sounds good to be the one that people ask for money, but it sounds better to be the one that gets to give them the money. But that is not as fun as it sounds to be. All of that said, now my question, I have two questions, and one I asked this question last year, Mr. Tyndall, so forgive my ignorance, it's been 364 or 5 days since I've asked this question, but I'm going to ask it second. Primary question, I want to make sure when I look through this list of these wonderful organizations, I've probably, in the nature of what I do for a living, I've probably served on half of these boards. If I've volunteered for these folks, or I've gone to a breakfast or a lunch or a dinner and I've written them a check, right? So I'm invested in most of these organizations on some level. My question is, and I know that our legal counsel for the city always does a really good job of making sure we sign a conflict form every year. I just want to make sure that the committee is abstaining from inputting on not organizations that they have served on or organizations that they have volunteered for, but actively the organizations that they are serving on a board for. Just want to make sure that bias is being disclosed.
Yes. In fact, I don't think any of them are serving on the boards.
Right.
No.
Okay.
Was it a requirement?
It is that they have to disclose it first of all. Yeah. And to be honest with you, I do a lot of charity auctions, and we just donate our time, and I've raised lots of money for all of these people. I mean, we just do it because it's the right thing to do and give back.
And I see a ton of names on here I'm happy we're supporting, and I know some of the names we're not supporting, one of which I actively serve on the board today. That's fine. That's not my job, right? Here's my question for Mr. Tyndall. Remind me what this board's role is when we look at this data, because I don't see that I'm here to tell Mr. Montgomery and his group what we should or shouldn't fund. But if there's a conflict or something like that, or as it relates to the investment portfolio and other things, I'm sure we would opine on that. But outside of saying, this looks wonderful, Mr. Montgomery, please tell the committee what a great job they're doing. What does this board, what's the obligation for this board as it relates to reviewing and approving this?
Well, the board approves the final recommendation. So the job of the committee is to make recommendations to the board. So they do as people recognize, a lot of hard work, and they do it very well. And in the setting up of the process, we were brilliant enough to do this right at the end of the year, so they have to do this over the holidays, which is even more onerous. So they do a
Rick, I do it while I'm duck hunting.
Yeah, duck hunting. See, so, but that's their role, is to make the recommendations, go through the hard work, and come out with the numbers that all fit within the matrix of the trust that's required. And then this board oversees that, make sure that it was done, and that's why you have the report here, and then approve that request. And if there's anything out of line, either with the investment guidelines or with the board's knowledge of the community or something along those lines, they can disapprove it, they can change it, they can realter the numbers, they can do a lot of different things with it. After the board does the approval, then it will go to council. They have an up or down vote. Theirs is just either accepting what you've approved or rejecting it, coming back, and probably with a comment, and then the board would have to figure out what to do from there, and we don't anticipate that, but that's a potential. So that's the order of approval for this process.
Okay, I just want to clarify, because when I look at it, I can emotionally get involved in some of the causes and start thinking through that, and I remind myself, Richard, that's not why you're here. So,
yeah, we've put together, I think, a pretty extensive process, and with staff's help, Karen and Angela have done a really good job, and we found software that assists in that, and there's a whole lot of effort in vetting that really goes through this to make it work and get to this point. So the board should have confidence, I think, in the process that has gone on. That said, it's ultimately the board's decision on where the funds will go.
Well, Mr. Montgomery, I don't know if you know this, we were fortunate enough to get all the information and be able to review that before I looked through it. I saw no items that stood out for any reason whatsoever. Again, we appreciate all the hard work that's gone into this, and when we reach that point, I've got no objections with this and happy to move forward. Thank you, sir.
Thank you.
Remember where we were this time last year? I mean, I think the staff really are to be commended. This is unrolling beautifully.
Thank you.
Yeah, and I'll kind of add a little bit of color to that, just so you know, the things also, as I remember back to originally how we kind of built all this stuff, just the idea, and I'm glad you're here, I'm glad you gave us the report, I'm glad you guys are all asking great questions, because it's important to understand, as you can see, with our role here, it's important to know kind of what that process is. What are you going through? What are you doing? Because it's if we lose confidence in that process, that's when we're all going to start questioning what these numbers are a little bit more, and, well, should we do a little bit more there, a little bit more there? When we built this thing originally and decided to do two separate committees, it was all about what, Ann said, which was this is why you have these voices that come together. And yeah, there's not any perfect mathematical algorithm to say, well, they should just get this much. You have to have people who are in this position. You guys are appointed by an elected body. They are. So there is some level of cover there, right, in terms of making sure that people who are elected are helping within this decision. And then it flows all the way back through us. So, one of the things too that nobody's talked about yet, but I think is very cool, especially with Karen being here, is one of the things that we struggled with in past years was when we did this as outside agencies or whatever we called it.
Strategic partners.
Yeah, strategic partners. So we would find ourselves, the city council, giving money to the Murfreesboro City Schools Foundation, for example. I mean, we fund the city schools, and we're giving money to the City Schools Foundation. There were all these, and it's nothing, there's nothing wrong with that in terms of the idea behind it, but it's just, you're just duplicating efforts. Nobody's really keeping up with it. Well, during this whole process, Karen and her team and the Craig, the city, they're looking at all this stuff to make sure that we're also completing, or I'm missing the word, but basically helping whatever else the city is doing in any of these organizational levels, if they're doing any of that. If the city is contributing to land to a habitat project or something like that, that this would be a complement to that, or we might not do it through here because the city's already taken it. And there's all these levels of stuff like that that are going on that were sort of built into the framework of building it, having that committee, having our board, and making sure that this process exists. But when I looked at this, same thing, I'll second what Richard said on this, is just that, when I looked at it, I kind of went through just the basic idea of, is there anything in here that stands out at me that just, doesn't look like it GHAs? And maybe because of my past service work, I'll call it, is that, I want to make sure, does this sound like stuff that our current council, that fits the administration that's there right now? And is it something I think fits our board? And, again, nothing just stood out to me to go, well, hey, I need to get more information from Carl about what the process was and why they only get 6,000 versus 9,000. But I might one day, and it's true. I mean, I don't think any of us should hesitate from that. And I wanted to finish by just saying to you, don't hesitate. I mean, if you see something that you get emotionally involved about and think it's worth asking, man, just ask. You separately or in here or whatever. That's what we're here for. Okay. I mean, we're here to prepare for it to get to the council for a vote. So if you think it needs to happen, let's do it.
Does the community see this breakdown? Is this like published to where just citizens can see?
Yeah, the committee's process is an open
The
process.
reason I'm asking is because some people may look, if you're just looking at numbers, like we've got all these great comments, which reading through those was really helpful to see. But if you don't know anything about the process and what they do, and you see that there's going to be, let's just go up to the Beasley Animal Foundation, right? $25,000, but we're giving $16,000 to child abuse. So some people might say, are you valuing the animals over the people? So just from an optics standpoint, I'm sure you have reasons why those numbers are what they are, but if we were to be asked that, or if you were, do you have a response for that?
Well, I think you asked two questions. The first question was, is it available to the public? Yes, it is online. The report is online and can be found through the agenda. So that's there. And the response part belongs to
The
Carl.
response to and I understand exactly what you're saying on that. And a lot of it has to do with how much they asked for, how much each member recommended, and averaging that out, and that's where you come up with that number. And so we know over time, as this thing grows, we're going to have to probably have more of a line item. Hey, this is not, for the first 2 years, it's kind of averaged. It's worked out about pretty good. But we do realize and know that it's going to get bigger and bigger and bigger, and we're going to have to really probably analyze those differently than averaging everybody and trying to figure it out that way and then making it all fit in a $490,000 budget. But yes, I understand that will be a question in the future.
It's hard on the numbers to equate them too, because you see the service categories and the limitations.
That's true, too.
So certain things get funded.
Yep.
And then that funding bucket is full, then it has to flow to something else.
Yep.
And the categorization is important.
And I'll follow up on that as someone who served on the Beasley Foundation board for many, many years. When I see this, though, to respond to your comment, when I see this, though, I see the 25,000 out of 500,000, which is ballpark 4.8%. Well, the other 95% goes to people, right? But it goes to the human side of it through 30 other organizations. So that would be my response. And we have these allocations and these buckets that we're looking to fill. I wouldn't focus as much on this individual allocation is going to a foundation for pets. Shouldn't we be giving more to people and the human side of it? My response to that would be, we're giving $465,000 on the human side. We're giving 25 on the pet side. That's my opinion. I haven't been on that board in 10 years, but it's a wonderful organization.
One other thing I'll just ask you, and something for your committee to be considering is all of this stuff, as Ann said, is kind of a little bit of a work in progress, right? I mean, we've come a long way in the last couple of years, of course, but there's still going to be places where we see improvements need to be made. And, just as I recall, with a lot of help from a lot of people and staff and people who are smart in these ways, is, building out those categories. The idea there being that we don't get overloaded in any one area, right? We don't find ourselves sending 90% of the money all to education or to whatever it may be that particular year, so that we're not bouncing around and it's more of a smooth thing. But Carl, what I'll kind of mention to you there is if you guys, as you talk through this stuff, if y'all go 2 or 3 years and every year you say that something comes up like, and I don't know that this has happened, I hope it hasn't, but I'm just kind of envisioning this potential, is that if you guys are in your meetings and you're saying, this limitation on community safety and victim services is killing us. We get all these requests that are in that category, and we only get one request in health and related services or whatever, and we're giving them everything they're asking for because it's the only request in that category, but we got all these other things. And that's certainly something to let us know that sort of thing might be happening, and do we need to go in and tweak the trust agreement to maybe change those percentages around a little bit? I mean, obviously, we'd have to talk through the legal, and listen, I'm going to tell you right now, I'd be real sensitive to that, personally, as a board member, especially because of the history there, I suppose. But if it's something that you guys all are seeing this in more detail and saying, hey, maybe if it's just going from 15% to 20% allocation, or, whatever, and shifting 25 down to 20 over on this other one, that's stuff we need to hear.
That's a great point, because I could see that happening,
Well, yeah, and I don't want to rain on that parade, Brett.
I know.
Adjusting that trust is going to be, I think, a legislative act, so it's going to be hard to do. But that, not to say we couldn't do it, but that is embedded in the trust. And part of the thinking, and Rick was part of it, so he knows, and was that the city does participate in some of these. And you mentioned before, for example, education. I mean, the city funds an enormous amount for city schools, and so education is massively taken care of. And so to have more money being put into education is kind of hard to justify, and that's why there's a limitation, I think, on limitations. And community safety, obviously, is a huge thing that the city does, probably the number one thing it does, police and fire. And some things fall within that, some things fall on a nonprofit, but overfunding of certain things. So that was the thinking that went into to create these categories, and so there's a reason why they're there, and and everybody should understand it's a percentage. So the more money that's there, the more that's available. It's not a hard number that's wired into that. So as it grows bigger, there'll be more available to education and youth services than there has been in the past, say.
Yeah, and I'll clarify by saying, when I said I'm going to be sensitive about it, I would be real sensitive about it. I'd be real sensitive to change it at all. I wouldn't, my natural response would be, it shouldn't be changing.
Yeah.
But if there's things out there that just are functionally not happening, like literally from a functional standpoint, because of those things, I mean, we did do the best we could setting stuff up on the front end.
Yeah. I knew what you meant when you said sensitive, and I wanted everybody else to know what you meant.
Yeah. I mean, I definitely,
there was a lot of work
for a reason, and it's set in stone to a large degree, but we would need to know some of those things if it's,
Yeah.
I mean, it just wouldn't be because you guys thought, oh, well, we need to have a bigger percentage. It would need to be.
And other ways to address it as well. I mean, if the limitation was, if it was a huge amount that going to community services, and there was a lot of nonprofits having to address community services, it may go back to the city to say, City Council, you need to do something that is different to fund it different ways. So it could be more than just adjusting. It could be a larger issue.
Yeah, that was just kind of my question when I started asking about the impact, is how is that going to all play in the future allocations and the fund getting larger and things like that? So it's good information.
Quick question at the risk of you breaking out your spreadsheet. It was a beautiful spreadsheet, by the way. As we're looking at this $491,000 number, and I know part of the benefit to the city in this trust is to diversify, supplement, replace, depending on the level, some of that grant process that the city was undertaking and moving that over on the trust side. Rough numbers, where, as a benchmark of success, where can we look at and say, look, we're giving into the community $491,000 this year. The city historically did X. Was that $1 million? Was it $2 million? Was it $491,000? Because I'd like to see 200. Well,
In rough numbers.
good.
Yeah. Like 200-ish.
We've done it.
No, it's
That's awesome. We're
And
doubling,
it's
tripling that number now.
a 34% increase, what we did the previous year, and that's a great number, but you got to consider also in that number is the fact that the trust is paying more fees out of that. So, as we built the models out, we thought, well, the first year, we might be less when we do our second round of funding because we'll have more fees, administrative fees and stuff built into the trust. And it ended up we didn't. We had 34%. And some of that's owed to Tim's hard work and
Superior management.
Yes, superior management of the trust fund, but you know.
Timing.
So it is a big benefit financially to the city, and it'll continue to grow as we go forward.
And also, you look at this list, and it's so much longer than it would have been, what, Rick, even 10 years ago?
Yeah.
There's so many new nonprofits. And, you know, we add them every single year, just a few, but it really does add up to a lot more requestors.
I feel like we got to take a little bit of credit from all the hard work that Tim's team does, all the hard work that Mr. Montgomery's team does, and I feel good when I see this.
Yeah.
But too, don't forget, you know, the idea of this, I mean, that $5 million that Tim talked about was not possible without the structure, right? I mean, because government
Oh, yeah.
way they can invest money, and, you know, I mean, this is, so you got extra going to the charities, you got more charities we're serving, and
It's better the last couple of years, but
And
nowhere
making
near
money.
this.
making money on top of that, so that next year it's even better, and the next year in terms of compounding and how that works. I mean,
Yeah.
the whole reason we did the dollar cost averaging thing at the beginning of last year was the idea of getting that thing started on the right foot and kind of building out a big dollar cost averaging with our new money that's coming.
Yeah.
And so not having a big drop in that first bit there, now we've got a head start. The compounding is way in our favor now, even if we do have a market blip this year. I mean, we got a cushion that's going to cover us for a large part of that. So, I mean, math is looking good. Might have to go update the
It's
spreadsheet
justified.
tonight. That always had to happen after midnight. I don't know exactly why.
So Craig, could you tell us about the 85%? I know we spend a lot of time talking about the 15%, but the money that's coming in for the roads and the parks, what's that enabling the
Well-
city to do?
Yeah, there's two categories of that, and I think we get the incremental payment from MTE, and before it comes to the trust, there's a portion that's allocated to specific roadways and parks and
General fund.
general fund. And then there's the allocation that comes out of the trust at the end of the year that goes back into the general fund. So there's really two ways to that. The initial increment that comes out of the payment will go away in a couple of years.
This may be the last year.
Yeah, this may be the
And,
last year.
For the roads and general fund. Parks has already been fully funded.
Yeah. So then the entire MTE payment will come into the trust. And then,
So that was just on the front end, the
That
first
was
few years.
This
that-
first few years.
yeah, that was on the front end where it was, before it came to the trust, there was an allocation that came out of it. And,
Also had general fund dollars that covered the payment in lieu of taxes, right?
Right.
Right.
That's what the
Yeah.
85% is covering now.
exactly. And so so at the end of the year, it's calculated, and 5% is dispersed. 85% of that 5% goes to the city, and that goes into the general fund.
Okay.
And Aaron gets to figure out where that goes. Well, actually, council does, but Aaron tells them where it should go.
I suggest very
Suggest.
kindly.
And then what we see is a 15% of that 5% is what we're dealing with here. Did that answer your question?
You did, thank you.
In the same way, I'm going to piggyback on that in the same way that Richard, I think it kind of makes us understand this a little bit better, and I think it would be good. I don't know if this is if this is a doable request or not, but in the same way, we can kind of say, hey, we used to give around 200,000 and now we're giving 490. You know, there was this benefit to the city via the 85%, you know, that was bigger than the payment in lieu of taxes. You know, it was always known that it was going to be bigger, just based on sheer math. You know, if we did have a way, I mean, we can automatically go through whatever the number was, $5 million to parks and $10 million to roads, which we'll get to next year. So we're already to the good on those numbers, plus whatever the additional yearly amount was in addition to the 3.1 or whatever we got from the payment in lieu of taxes. I mean, if the city is getting 4 million, we used to get 3.1, and we're getting taxes from MTE, property taxes, instead of the payment in lieu of taxes. So if we're getting 4 million plus $1 million in taxes, we're 2 million to the good on top of the 3.1 we used to get. And that's just the city taxpayer. That's not us, but it's because of this trust. So if there is some sort of halfway running total. It doesn't have to be exact. I don't, that'd be too much work to do, but that'd be cool.
Yeah,
Yeah,
we could come up with that number. The tax in lieu is, we know what that was.
Yeah.
That's a complicated, calculated TVA-directed number
If we
that,
just took that, whatever, 3 million or 3.1.
last year, yeah.
4%, which it typically grew at.
Well, yeah, and it probably wouldn't grow a whole lot, and I'll tell you why. It's because the MED was limitation on its growth, and it's based on assets we're depreciating, and so
Oh, it was
there
actually going down.
Yeah, it was
Yeah,
it was
wow.
due
It was
to start to drop over time, so. But we can use the last year as a benchmark, because it would be at least that or less, and that would show. That would probably be the high water mark anyway.
The next two payments from MTE will have $5 million in this year's payment go to roads and $1,750,000 to general fund. And then next year will be the last payment for roads, and it'll be almost $2.5 million to round out that total. And then we'll have a few more years where it just drops each year, going to general fund through July 1st of '29, and that ends at $250,000. And so
Small amount.
it's reducing each year with the general fund's take is before we make that contribution or that deposit into the trust.
Yeah, so.
Thank you.
That 1.75 million that's coming out of the payment to the general fund, you now have to add that to
The
the
85%.
85% of 5%, right?
Right.
So, you're at 2.7 million just on the 85% of 5%, plus 1.75 million, that's 4.5 million going to the general fund from this, and it used to be 3.1. That doesn't even count the roads, the road money, the park money, all that was in addition to that, so,
It's
yeah.
That's what it looks like. So this
So-
year, we'll get, the trust will get 10.5. So, put it to good use.
So that to the city column started high and went lower because as the trust builds, the 85% of 5% will supplant plus some.
And that's broken out by the parks, transportation, general fund over to the right. So not all of that is going to general fund, that to city. Most of it is going to roads.
Yeah, the general fund at the far right. is what- Yeah.
Mr. Fletcher, you have a question?
Well, it was back on the distribution of funds. If this is just for my personal edification. Like I said, did a great job distributing these. But in this sheet under tab 3, if I read this correctly, that, no, that's not it.
I'll find it here. I got too many tabs open, sorry.
Okay.
Somewhere in there is.
Well, as I understand it, the maximum amount going to education youth services is 20% of the distribution, is that right?
Youth services is 20%.
And community safety and victim services 15%, and then maximum health-related services 10%?
Yes.
So those add up to 45%. Just an observation, not a criticism. As I look at that list over there on the left, I would put 90% of those under those three categories. And then I notice other is 55%, and I am a little curious how the committee, first of all, that breakdown of the percentages, 20, 15, and 10, was that by statute? Was that by this group? Was that by the committee? And then how do they determine, I'm sure it's a fine line between some of these services where it crosses over.
It's a trust, and it is a fine line, and there is not a lot of direction that the trust actually provides in the trust document itself. And so generally, we'll look at it, and the committee members weigh in, and they'll categorize. But when we get down to the end of it, we look and we say, well, some of these fit into more than one category.
Absolutely.
And if their primary work is more than one of these categories, it probably falls to other. And other is, a relatively large bucket. It's the largest bucket, obviously, up there. So, there are some things that are easy to categorize, and there's some that aren't. So we try to be somewhat judicious about that to make sure that funding can be made available.
That would certainly help with the problem I was talking about, but that's exactly kind of one of those things that I meant. If that formula makes things more difficult, we need to know. But we felt like we
Yeah.
tried to
Right.
do it in a way that there was some control over it, to not let it get crazy one way or another, but also left enough flexibility to get the work done.
And you could,
Not necessarily that the organization goes by
Well,
that
that's what I was gonna
category,
say.
but the use of the funds,
The
right?
project. Yeah.
so the program itself could be, I mean, it could be an educational organization that's funding something that's related to education, but could fit into the other category. So there's a little bit of,
But the other can be a catch-all, is what I'm hearing.
sort of, unless it's really obvious. I mean, if it's really obviously health-related, then it's hard to say, well, we can't really justify it as an other. We're going to have to hit our bounds on that.
Yeah, you all have done a great job. I mean, you pretty much answered all of my questions. Somebody asked that question. But, to piggyback off of him, those funding categories I was looking at on your spreadsheet, do you all just kind of use your judgment to make that decision, or does a...
Yes, each committee member uses their judgment as to what category it is.
Okay. And then last question, I think, Craig, you already answered this one, but I just saw your comments on your issues with the necessary adjustments, and I think that's based on the allocations. You all still trying to figure all that out?
It is, and we've talked a lot about this go-around, that as the numbers increase, it makes a lot bigger difference to do just a mathematical reallocation, because then you're not being really fair to a program that you do want to provide more funds to. And so there is some subjectivity in that. So we talked a lot about this board is this year and last year to make things fit within the category. If we were overfunding, say, community safety, to mathematically take that number and distribute it in the category to reduce it down to the number it needs to be, because then you were dealing about a few $100s here or there. And it didn't seem like it was a lot of necessity to do a subjective analysis. That will change as we go forward in the future. So we wanted to make sure that the committee understood that while we were suggesting that to make it work from a staff standpoint and did all the math in the spreadsheet, we didn't want them to feel like that was a necessary way to do it, that there's other ways to do it, there's much more subjective ways to do it, and that's kind of their job in reviewing and making recommendations.
Yeah. I always, having an audit background, I always get nervous changing it year over year. So I just say that to say you all have it at top of mind already.
Yeah, and the trust doesn't define how that's to be done. So that does give a little leeway to do it this year when it's kind of a de minimis adjustment. And then in future years to say, well, wait a minute, now it's no longer de minimis. It needs to be something done a little bit more. So not having a firm baseline that you're working off of, or firm direction that you're working off of, I think explaining it in that manner, auditors always like to have things done the same way over and over again and all add up. But this process is just not a mathematical process, and there's no way to avoid it. There is subjectivity in there.
Understood. What other questions do we have for Mr. Montgomery, Mr. Tyndall?
I'm a real quick comment, and then I'll stop talking, I promise. Perhaps it would be beneficial in the application process to ask the nonprofit which one of the categories, one or all of the below, do you feel that this project
Is that part of the app?
falls into?
It's not, but they will all put other. It's exactly what I think they would do.
All, right?
They got a better chance at other. So, I think we've got to grade that out.
5% budget.
I thought the same thing, but then I think we've thought through that too.
I'll stop asking questions so Mr. Burdick can get on his plane before it gets dark. I don't know if he's instrument certified or not, but
Well, the enthusiasm for this is certainly, good to see, and I know all these great organizations are making a great impact in the community, and, just proud to be a part of a board has a small part to play in that. Kudos to what you and your team do, Mr. Montgomery, and all those who assist with that.
Well, thank you, and it's an honor to serve.
Absolutely. Any other questions?
we need a motion.
there's not any more questions, I'll move that we approve the recommendations from the committee.
Get a second? Okay, it's been properly moved and seconded. All who approve, can you respond by saying aye? Aye. Those who oppose? Thank you so much for coming. All right. Moving on to the next item on the agenda, which is item number, can we skip over 5? 6? No 5.
It's a mystery.
That's just between you and I.
Just keeping you sharp.
Indeed.
Right.
I know you have an announcement you want to make regarding this.
Oh, yes. I received an email, you'll notice Lee's not here, and he told me that he wouldn't mind if it was shared with the board, but earlier this morning he said, he sent an email to me, he said, Craig, unfortunately I will not be there today, for I'm checking into Ascension St. Thomas West today for brain surgery that is scheduled for Thursday afternoon. I've been having headaches over the last few weeks, and recent series of MRIs showed that the tumor is returned and growing rapidly, which is the rush to surgery. So the request would be to keep Lee in your prayers, and he and his family as he goes through that process. So, sorry to provide that news, but
We'll certainly be thinking about him. I'll be sure to add an extra prayer
yeah.
for Mr. Moss this evening with my family and everything. We hope all that goes well and look forward to seeing him soon. Any other business we need to discuss? Okay, future meetings. We'll go through the process of just...
Yeah, it would be very helpful for the board to have a meeting in June sometime, and we'll survey to come up with a date unless everybody feels like they can put together a date right now. And that way we can adopt a budget for FY26. And also, I mentioned as an aside to Tim that he could do his asset, what was it, asset allocation study, but and so he could have that available in the June meeting. So that would be our target date, sometime in June. And I know that's prime vacation time, so I'll have, what?
Or May. Council will have to also approve that budget, so if it's early June, then we can get that to council in June.
Aaron always.
I know, I'm sorry. So I just said,
early
or if we
June.
could meet in May.
We'll have it set up.
I can tell you I won't be here.
Okay.
I mean,
That first week,
I-
people are gone.
yeah,
Where we
I know
going?
I'll be gone.
Late May.
You're...
Late May.
Yeah, I'd be in the middle of the ocean somewhere.
All right. We'll have Brenda do a survey and gather dates from everybody and see if we can hit a date that works and have a meeting. I would anticipate it'd be relatively short from a budget standpoint. You've seen the budgets. There's not a lot to it. And then the asset allocation will take whatever time it needs. Not too long. Okay. All right. So we'll just focus on those two for that meeting unless something else comes up.
Last thing I wanted to ask, and I just can't remember, weren't we having some conversations about insurance at one point?
Filed for the directors and officers liability insurance, yes, that went in today. I wanted to submit a audit report because the trust is in the audit, and we got the audit, and that was posted a week or two ago. So we got the audit information, so that went in today. And this week, if it hasn't been done, it's supposed to be done this week, filing for our application on the tax to get our certification. And we've worked with the attorneys over the last couple of weeks to get the information he felt like he needed to get that filed. So,
That's the tax exempt certification.
right, get our tax exempt status, yeah.
Excellent. What other questions we all have before we adjourn? All right. Hearing none, it is 5:34. We'll consider this meeting adjourned. Thank you for your time.